Welcome to Bears in Exile. Today is May 6th, and we're going to look at the Dow, the SPX, the VIX, and TNA. Here we have the daily Dow, and over the last few nights we had been talking about the bubble and the bubble correcting. Yesterday we had a complete bubble correction thanks to the down move, and that the chart needed to figure out what it was going to do from that point. Well, today we have a inverted hammer candlestick, which should not be traded solely on having a inverted hammer, but it is nice regardless because it is a potential reversal candlestick. Now, what else do we see today? We see that the angle of descent of the short-term moving averages has been knocked out pretty well. It is still pointing down slightly, but essentially is moving sideways. So what does that tell us? That tells us that without further crossover, the likelihood of it coming down to test the bar is much less than it was before. So very nice. This looks extremely weak for a bearish move going forward. And here is the 30-minute daily, and we had talked about how we had a bubbly looking thing here at the end of yesterday on last night's video, and sure enough it went up to correct it. It actually had complete crossover prior to entering the bar, put the hurt on the bar, completely penetrated the bar, and right here at the apex we had an NDE hit, which was talking the news about Greece leaving the euro, and that put the euro in a free fall. The dollar rocketed up, and this is what happened to equities. Boom. So they're going to have a meeting tonight, and I theorize that the leak of them leaving the euro was an effort to get better terms tonight. So we will have news on this over the weekend, and definitely something to be on the lookout for. Can Greece leave the euro? I don't think so. I think that the other euro members can kick you out. I don't know that you can just say, I quit and leave. So I think that whole news story was bogus, but we shall see, and that is my guess. But from here on, that was all news driven from my perspective. SPX, very important. We talked last night on the video about it straddling the reverse head and shoulders neckline, and we said that it needed to bounce off of it or close below it, and it didn't exactly bounce off it. Well, I suppose it bounced off of it, but had this been a full candle, that would have looked much better, as regarding it bouncing off. Instead, we got this almost an indecision candle, high tail, low tail. However, we can see that the short-term moving averages are losing steam. So if we have another down candle or sideways candle, as long as it's not too far down candle, this will come down and sit on the bar. This does not suggest penetration of the bar in, unless we have, a gigantic, 30 points down Monday morning. It's very unlikely that we'll have a complete crossover and put the hurt on the bar. So, since the bar still have complete separation and is bullish, I would still give benefit of the doubt to the bulls, absolutely. And the rest of it looks just like the Dow, so I won't rehash that twice. But yeah, clearing that reverse head and shoulders neckline, definitely a plus. And had we not had that NDE, this would be a big green candle. So I'm guessing that if the story is debunked this weekend, Monday, the euro could firm up, the dollar could fall, and then we'll be off to the races again. But we shall see. That is speculation, and the chart is mixed. Then we have the VIX. All right, this one's pretty interesting too. The VIX was climbing all day, which does not line up with the Dow and the S&P, because when they're going up, this should be going down. So something is not right with this picture. Either the Dow and the S&P are wrong, or the VIX is wrong. And we have a couple of clues here. A, we don't have complete turnover and separation prior to entering the bar, even though the bar is pretty wimpy. But that's a warning sign that it should not be putting the hurt on the bar. Bar is pretty weak, so it did get through it all the way, but still part of this is barely having separation now and is coming out of a partial flat line. So that's a warning sign to me. Other warning sign I have is we have the top Bollinger Band here, and the candle is kissing it, straddling it right here at the top, maybe even peeking through it a little tiny bit. But if you're wanting something to run, you don't want to be running, pushing the VIX, pushing the upper Bollinger Band back the entire time. That's resistance. That's it's just not what you want to happen. Certainly it can happen. It did happen back here, where it just pushed the heck out of it, and just as fast though it fell apart. So something to be aware of. And then we have TNA, and we mentioned in last night's video that the candle was very favorable compared to these other candles, of course, and sure enough, it went up today. It was all over the place today, just like the Dow and the S&P. And right now what we have is essentially a giant spinning top showing indecision. But we do have clues in the short-term moving averages, because they are now still pointed down, but now more of a sideways down. And we're barely getting full crossover. We don't have complete separation, and it has already entered the bar. So those are not good signs. So definitely, I would say that the bulls have the upper hand still, even with all of this downhill movement. Short-term moving averages are telling us a different story. So just like the S&P, we could have compression, flatline, come sit on top of the bar and see what it does. Or if we do have a green day on Monday and a move up, you'll see all of this come back together and either have a flat line or a beginning of a crossover back in the positive direction. But for it to just finish a separation and plow through the bar completely, I would say that is unlikely. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Pay attention to the news this weekend, and we'll see you on Monday at bearsandexile.com.